Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. I've got with me Scott from Sow and Reap Capital. We were talking a little bit before this. He said hit the record button because I was talking about my previous stocks that I had held for, well, it was in my 401k and I bought them. It seems like 070, I think 06, 07, 08, and 09 was when I was really buying a whole bunch during that time frame. And it was unfortunate that my company got bought out and that 401k, I was talking to the company that was buying out. It happened, the merger happened in 2011, the announcement, and it actually merged in 2012. And I could not keep my money in my old 401k because my old 401k was through Fidelity, that brokerage. And I could set up a brokerage account and I could buy up to 50% of my 401k in individual stocks. And that's what I did. And then in 2011, we got bought out, and then I started to say, hey, what's their brokerage account look like? What is it? Because that's what I'm interested in. And then they said that I had to move it if I wanted to remain employed with the company. I had no choice. I could not break this apart, is what they had told me, and that the assets were actually owned by the company that was buying us. So it had to move over. So I was like, great. The only way I could have prevented it is if I had left the company and I could have kept it in my old brokerage account. Little did I know, I would have been better off leaving the company, leaving all of my stock in those companies that I had, given how much they've gone up. And I know looking backwards is 2020. I had no plans on selling these, and that's why I was inquiring about keeping them in those stocks. And I was basically doing a Warren Buffett approach. Warren Buffett is very, what he tells you is buy a stock and never sell it. And what I did is I combined Warren Buffett's approach with Peter Lynch. That's literally what I did. Peter Lynch is basically says, buy what you see, buy kind of what you know, and if something's going up, go ahead and buy it. So what I did is I looked at my wallet and said, well, what do I own and what do I use? I literally did that. I had Blue Cross Blue Shield insurance. I bought Anthem. Anthem today, now it's called, what was it? Ella, it was called whatever it is now. It's called something else. They got bought out again. But it was Blue Cross that I had at that time. So I bought the insurance company. I bought that. United Health Group was a huge winner. So I bought United Health Group, and I also bought Cigna. Cigna was another main player. So those three, I would say those three insurance companies for health insurance companies were the main players during that time frame. So I bought all of them. I bought a little bit of each. It was CIG, UNH, and then I bought Anthem was something else. I think it was called WellPoint. It was called WellPoint. WLP, I think, was the ticker symbol, WellPoint. So I bought all those, threw them in the portfolio. Then I went through my wallet and said, well, Visa and MasterCard, I own all of these. And everyone was doing transactions with Visa and MasterCard. They were like just swiping it to buy gas like nothing, right? I do the same thing. I don't even look. So then I loaded up right when Visa went public. I bought a bunch of Visa. I bought a bunch of MasterCard. MasterCard went public before Visa, and I could buy MasterCard back in like 06, I think. 05, 06 is what I remember, because that's when I could open up my brokerage account. I started working in 04. So I was buying MasterCard when it went public. I bought Visa. I bought Chipotle. That went public in 05 or 06. I bought basically, because I ate at Chipotle. I thought Chipotle was good. I was eating there before it went public out in California. And I was like, man, if they went public, this place would kill it. I think the same thing with Chick-fil-A. Chick-fil-A would be a company that I'm like, I'd be all over it, because every time I look at it, here's my opinion. Chick-fil-A is the best run company I have ever seen. So when you pull up, what they did is they have these little buildings and they pump product through there like no other. They bring people outside. They have lines of cars, 2 lines of cars wrapped like halfway around the building every single day. all day long. They have this, and their revenue per employee and their revenue per location has to be the best. And what they do is they take your order, they like get you all the way back, and then you're in the line. It's not like you're going to turn around and back away if you already have your order in. And then they move the line pretty quickly. So they've basically worked out all the kinks in ordering. It's ridiculous. So I own those. I own Google in that same time frame because that's what everyone was using on the internet. So I was like, I'll just choose Google. I was not a big Facebook fan. I never got into that. I bought Baidu, Bidu. That's the Google of China. Yeah, it's ridiculous. You don't want to. He's all
hold on, Andy. Hold on. So what you're basically telling me is that you had exposure to all your case study stocks because you're talking about like stocks that did 100x.
Well, here's the thing. These picks were not hard. Like you could tell Google was killing it. Everyone was using Google. I'm like, I'll just throw money in it. Who cares? That's literally what I did. I just chose everything that I saw growing. And then later on, I bought Roku because they started showing up in Walmarts because they're like, oh, I have this Roku stick. I love this thing. And I'm like, I'll throw some money in it because I just saw it growing everywhere. I didn't even have to really try very hard. I bought Nike. Oh, Nike was another one. I bought Nike and Adidas. Those were the two shoe companies. ADDYY is the ticker symbol for Adidas, and NKE is Nike. And that was back in the mid 2000s, 2005 or 6, and that range in there. I just bought it because, I mean, everyone wears Nike. Everyone wears Adidas, and that's kind of what I liked. I started to buy a couple of the alcoholic beverage companies as well. The companies back then that were good. I had a little bit of Heineken back then. That's I think it's Heyny. Heine. Heyny, I think is Heineken is the one that I owned. And then I owned Sam, that's Boston beer. That thing has been up and down, all vertical. Sam is Boston beer.
Whoa.
Yep.
Wow.
You like that, don't you? And I bought it in like, I bought it a long time back. That's what my buddies would always buy. It's that guy on the front of the mug, the Boston whatever guy, and I was like, I'll throw some in there. So that was another one I own. I basically, no, it wasn't. It's not that. It's Sam Adams beer is the one that I'm thinking, but it's a guy on the front. It's probably the type in Sam Adams it's like a guy, and my buddy would always drink it all the time. And then it got real popular. I just saw it everywhere, and I'm like, I'm throwing a bunch in. Screw it. And that's literally how I invested for a long time because I just chose whatever I saw. Like I looked at it. Yeah, there's the Sam Adams. That's the one. It's like I think there's a guy on it or at the top of it or something. Yeah, the guy holding the beer. You can see it. No, it's on the that guy.
Yep.
That's it. Yep. And I made a ton of money doing it, like a ton. And then they sold me out in 2012. And I was like, no, it's not what I want to do. And I probably would just keep those companies anyway, even now. But
that is exactly what Peter Lynch talks about all the time in terms of your approach to investing, right? Because this One Up on Wall Street, this is a book that I'd highly recommend. Maybe not so. I mean, given the ratios and everything, where the general equities are expensive relative to commodities, maybe it's not the time to be exercising his approach. But this is a killer of a book for anyone that hasn't read it so far. Like I've probably read this like 5 times.
That's basically what I did. I combined Buffett and what Buffett would say is he would always say, I would be, this is what his own words, I would be more wealthy if I had never sold a stock. And I was like, all right, so how about I just pile into these things that look obvious to me? And obviously there was maybe 1 or 2 that weren't that great, but I chose a whole group of like insanely good ones. And I just thought, that they would be really good long-term holds. So I held everything that I thought was good. And then what I did, and this, I know it's crazy, when I was like 30 years old or so, I just back tested what I knew as a 12-year-old. And I said, what did I do as a 12-year-old? I used to go eat at like McDonald's. I would drink Coca-Cola products. I had Nike shoes. And like I was trying to think back of like what I was actually buying during that time was publicly traded. And I said, well, what if I bought it when I was 12 years old, knowing what I knew at 12 years old? I would have been like flat out rich because, and those are just choosing just like stuff that I went and did. Cause my dad be like, oh, we'll get some McDonald's and oh, we'll get you some shoes. And I'd be like, I want Nike shoes. And I don't know. It just seems easy. So
Yeah.
just choose what's obvious. If it's not obvious and it's some obscure little company, then don't buy it. Like it probably
I
isn't
agree.
as good as you think, but you know, if you see something growing, Chick-fil-A is something that I would just load into like no other if I could. That's like my favorite company right now. And there's a couple other ones too that I think would do pretty well.
Do you
They're
have
all
Chick-fil-A right now, or are you
what's that?
all invested in commodities? Do you have those companies now, or are you
I
invested
still
all in
have
commodities?
United Health Group and it
United Health.
wasn't in my 401k. I've held that one for a really
United.
long time. It's UNH.
Yeah. This
It's
one?
down. Yep, right there. That one. You don't
Oh,
want to see it. It's ridiculous. It was
and
20. It got down to like 20 something dollars, I think, in 2009. I don't.
is
Oh,
that where you bought
17
it?
maybe. Yeah, it was real cheap. And it's a 20. Was it a 20 something bagger? Yeah,
Yeah,
or 30, whatever it is.
yeah.
I didn't buy the bottom though. I tried.
I mean, that goes to show you that it doesn't matter whether you pick the bottom or not, right? Because as long as you have these massive moves in front of you, I mean, obviously you're going to gain more buying it right at the bottom, but like bottom picking, I don't know. It's impossible. It's impossible in many cases. So you just have to buy when it seems good enough. I think you just have to
Yeah,
pull the trigger.
and they changed. I think under Obama, they changed the ruling or whatever that people had to have health insurance. They went to these high
Yeah,
deductible plans. That was all positive going forward. At least that's what I thought, and it turned out to be positive. But I mean, I back then I didn't know nearly as much as I know today, and
yeah,
I was playing it, I think, right, just by partly sheer luck and partly by kind of just going and buying it. Like I didn't know that that was the best time. I wasn't like the expert chartist, even though I was charting. I was like, this is cheap. I'm gonna buy some, and that's all I did. And I cost average in. I just kind of bought it with paychecks, transferred it over, and bought some. At that time, though, there was fees to buy it, so I didn't really want to transact in and out very much. It was like $10 to buy and $10 to sell a stock. So I bought it in
yeah.
like
And
$1,000
we didn't have
increments.
all the great tools available back then either, Andy. I mean, thinking back to
Yeah,
my 2000s, my commodities boom. Like, I mean, we don't have any of this, like trading view, like we didn't have any of this. Like, I was using like these line charts, like so that looked
yeah.
really poor and like it was really hard to put in like moving averages and things like that. Like, there was nothing like what's available right now, even in terms of studying the fundamentals for a commodity and looking at history, right? Because history is pretty limited in terms of looking at the price actions in commodities. And it's not, I mean, internet was like nothing like what we have right now as well. So, I mean, we can take advantage of all the information available today for the upcoming commodities boom.
So one thing that I will say, buying those stocks, I paid no attention to the fundamental like valuations of those companies. Warren Buffett, all these guys would have told you that those stocks were horrible buys based off of their price to earnings ratios, based off of all of that stuff. Chipotle was always very expensive. Visa was always expensive. MasterCard was expensive. And I was like, I don't really care. I just think they're going to grow so fast, it doesn't matter. That's why I just bought them. Like I did not care about the balance sheets. I didn't care about the price to earnings ratios. I just said everyone's going to use MasterCard and Visa at some point. It seems like to me. And then I looked at Nike and I'm like, they've got a stranglehold. They've got LeBron James, Michael Jordan. I'm like, these guys are like epic all-stars that they've just got a huge lineup across everything. I'm like, they're just going to destroy it. And then I also thought, you know, like health insurance companies, people have to buy this. They're like mandating that you buy health insurance. So I'm like, this has to win. It's got to be. So I mean, that was my thought. It wasn't anything special about a chart or the fundamentals. And to be honest, whenever I tried doing fundamental analysis and trying to get like these undervalued companies, I always lost in that scenario. Like
Yep.
whenever a
Yep.
company was
Agree.
like they're changing, like, oh, they're making more money, they're doing this, and I'm like I don't know, it never worked out because the company was always some obscure little company that no one really knew about. But if I chose some overvalued company and every that like they're telling you it's not a good value, don't buy it now. I'm like, I'll just buy it. Who cares? It was like Nike and Anthem and United Health, like all these big behemoths that are just taking market share from everyone, and they always
Mm.
seem to work out better. That's at least my experience when
And,
I was
and,
investing.
and that is,
Yep.
I mean, that is the biggest lesson from Peter Lynch's book, right? Which is that you need to look at where you're spending your money and just invest in those sectors or
Yep.
companies, right? And if you ask the question right now, where has your spending gone up the most? Which area of your life did the spending go up the most? It's energy.
It
I'm
is.
paying more at the gas. I'm paying more at the gas station. I'm paying a lot more for my electricity. I'm paying a lot more for gas. It's like that's where money is going right now. And so that's why I think fundamentally it supports investment in energy right now.
No, I agree. I agree. I think energy is just ridiculous right now. I think it's a great spot to be. And I think that the largest opportunities for the future will be in energy. And I think what is sitting there behind Scott and his background, nuclear, is going to be the. I think that's going to be one of the largest growth areas of any sector, like period, over the next 10, 20 years. And if you take that long-term approach, I've heard multiple things. I hear people like, well, the longer you go out, the harder it is to project. I kind of think opposite. I think it's almost easier because the fundamentals maximize and your technicals minimize. If that makes sense to everybody, the technical charts, I mean, that's great on the short term. They're going up and down. You're trying to gauge the sentiment and the psychology of people, but all that gets washed away, and the fundamentals will be revealed over the long periods of time. And that's where, if you can identify a trend that's very early in its trend and you can project forward, you don't care about the sentiment. You don't care about what's the short term, I'll call it market noise. As long as you get some of these big trends right, I think that's where all the money is going to be made, like massive amounts of money. And I'm not talking like a two bagger or three bagger. Put a zero or two zeros on it, because if and I'm just going to give one example. All right, small modular reactors. If they can get this to work, and people are gonna, I think, have to adopt it at some point in the future. It's about positioning in what are going to be the next generation nuclear reactors. And if it works out in terms of people adopting it, I think it's going to go absolutely ballistic. So it's not about choosing the one company. It's about choosing the three best companies, getting money and exposure to it, and then saying, "Go make me money." Like just sit in it. And I know people get very they get anxious. It's like they see the price go down, they get anxious. They say, "Ah, I'm going to sell out. I don't know what to do. I'm losing money." I don't have that mentality. The mentality that I'm looking at is I am positioning in these companies for the next 10 or 20 years for this trend. Now, I'm not going to get the perfect bottom that everybody wants to get sometimes, because when fear maximizes in the market, it's very hard to see that a year or two or three ahead. So you might be in it, you're riding it, and then all of a sudden you get a fear dip. We'll call it a recession, a depression, COVID-19 or COVID 2020. That dip that you don't see if you're looking, a decade ahead or something. I just see that as a huge buying opportunity. It's not an opportunity to unload my shares and give someone else all my shares to get rich. I'm just going to keep buying and buying when it's down. My mentality is, I think, just different than everyone else. And I have a complete investor mentality. It is not a trader mentality. I know that. The trader mentality is, I don't want to own a single stock. I want to be in, I want to be out. It's basically um, it's a hit or quit it. It's a hit it or quit it mentality. Mine isn't getting married to the stock per se, but I can't be out of it. I have to be in it. I have to be invested. If I know if I think this future is going to be a huge nuclear future, I have to be in some of these companies that I think will do incredibly well over the long term. That is my psychological mentality. So that's, I mean, that might differ than a lot of other people. I know everyone wants to get rich quick. They want their portfolio to go up. They want the excitement. They want the what is it, the endorphins or whatever, the dopamine hits and all that stuff. And I don't know. I just look at this stuff from a different viewpoint, perhaps. What about you, Scott? What do you think? What's your
Me
opinion?
too. That's exactly my approach. That's exactly my approach. And when prices come down like this, I'm getting like super excited. Like I think they've come down to a low enough level where I'm like, okay, I've got precious metals on the sideline. I have it instead of cash, basically. And like I sold some precious metals yesterday. I'm waiting for the money to come in so I can load up on more uranium stocks, because I'm just like, this is crazy, the opportunity that's in front of me. And what I'm looking at is mainly a long-term view. Like even in terms of charting, when I see, okay, so I'll show you a couple of examples of what I mean. So right now, everyone's panicking about the daily charts of uranium, but all I'm seeing is the longer-term chart that's looking mega bullish. In that, usually what happens is, this is energy fields, for example. Like this 200 weekly moving average, if I had to pick one indicator to use for any of my investment decisions, 200 weekly moving average would be it in terms of my entry points and exit points, maybe. And so you can see with energy fields, for example, this had acted as a good resistance for a long period of time, and then we blasted through it, which confirms a trend change in many cases, and we're just coming down to retest it. Same with DNN. Like if you look at all the major names in the uranium sector right now, that's exactly what's happening. We acted as resistance, we blasted through, we're coming back down. This is an accumulation zone, right? DYL, deep yellow.
Yeah, so
you can see this across so many charts.
What everyone's doing is they're zooming in on the last couple of years, and they're saying that this is a head and shoulders top, and then people are getting really afraid from the short-term technicals. At least that's what some people are getting afraid. They're saying, oh, this is a shoulder, possible head, possible shoulder. And what I see, I take the big picture view. I see that 200-day moving average starting to turn up. So if you look at it from different time perspectives, you get completely different answers. And I'm in the long-term camp. I want the big money, and I'm not saying that they don't want the big money, but they want big money, but not any of the volatility. And I don't know if you can strip that out of getting big money, the volatility that is.
Yeah, that's right. And this is ELA, like retesting it. So all the major uranium names seems to be retesting the 200 weekly moving average. I mean, does that mean that we can't come down? No, because CCJ hasn't come down yet. Could we see a pullback of CCJ down to the 200 weekly moving average? Yes, we can. But am I going to wait? Probably no. I'm going to have to start scaling in now, because I think it looks attractive enough. And I've got a longer term view, just like Andy. And so if I'll show you a couple of examples of why 200 weekly moving average is so important, and why I think you can't pick the exact bottom. So this is IXIC, for example, right? So this is a NASDAQ composite. And basically what's happened is we've broken down, which was a trend change, and then we've come back above, and we're retesting here. So my question is, really, does it matter whether you bought it here or here? Or do you consider that an overall accumulation zone? And that's exactly what I'm doing with the uranium stocks. I don't know whether we're going to blast right off right now, or whether we're going to pierce slightly through and then go back up. But this is an accumulation zone for me. And it doesn't matter. If once you zoom out of this, it doesn't really, it becomes meaningless whether you bought it here or here. Like the most important thing is that you have a position in these names, right? And that's what I think. And so you've got a lot of examples where the 200 weekly moving average can show you that the trend has changed. This is Southwest Airlines, for example. Like once again, you blasted through, you've come back down, I mean, it can pierce through like that. So uranium stocks in the same way can pierce through like this, and it can look mega bearish for the short term. But is this an accumulation zone? Yes, it is. I mean, the fundamental story behind, I mean, with the companies that we're talking about here, for example, the NASDAQ overall, or Southwest Airlines, or any of the companies that Andy's talked about, Chipotle, or whatever it might be, the fundamental push or the market, the conditions for these companies were then in that they were growing their revenue, growing their operating cash flow, growing their net income over time. And so that fundamental push was there. In the same way, I think the big fundamental push is there for energy, as we talked about. I mean, if we look at our wallets now and look at where our money is going, we're spending a lot more money as percentage of our income on energy, energy-related things. So we're spending more on, as I said, natural gas, oil through your fuel, and also electricity. So if we look at where our money is going, for me, the short-term moves don't matter. Like, the most important thing is I'm looking at these major trend changes that's been confirmed by the breaching or breakout of the 200 weekly moving average, and we're coming down to retest it. And for me, around that zone is a buy zone. It's not a sell zone. It's not the time to be panicking. For me, it's the time to be panic buying, which is why I'm like getting so excited right now, because I honestly, because of the fundamentals behind uranium, I didn't think we would see these prices again. But I'm getting so mega excited right now because I'm seeing these cheap prices, like as if uranium is trading at like 30 to 40 bucks per pound. So I'm getting very, very excited.
Yeah, and another thing I'll make a comment on about me buying the companies. One of the other things that I tried to focus on, just so everybody knows, I really didn't go into technology companies because technology rotates over. So, Sony Walkmans were good, CDs, and then it went to, DVDs, and then whatever else after, like MP3s and all that. I chose a lot of companies that were really boring, and it didn't really change over time. Health insurance, credit, the credit card companies, like Chipotle and drink, like food and drink. Everyone needs food and drink. Everyone needs clothing. Nike. I was purposefully loading up on the stuff that doesn't get engineered out. So when you look at something like uranium, the companies, you can speculate on the companies that are making these small modular reactors, but they all need fuel. They all need enrichment. They all need these like certain things. So I'm more heavily invested in uranium itself. I'm more heavily invested in the enrichment companies and not so much in the end builders. So if Rolls-Royce wins, well, they may win. Maybe they don't. Maybe something like a NuScale will win, or maybe something else will win. I don't necessarily know. I know it becomes highly political at that point as well. If you have ties with the Department of Energy, they'll choose your design over some other one. Like it gets all kind of jacked up from that perspective. So I like to kind of choose the thing that is the feedstock. I like the oil exploration company. I like the uranium mining company. Just something that doesn't change and that will always be, value. So when I buy something, I'm looking at it like it's a store of value or a store of my wealth. I want to store my wealth in uranium. I want to store my wealth in oil and natural gas, in these different types of commodities that are needed. If I'm going to put my wealth in a company, I want to put it in a company that's growing, that people need continually. It's not like you can make a lot of money very quickly in a company like Tesla. All right, I'm just bringing up Tesla. I started seeing Tesla. I actually bought Tesla when it was very low, when I first started seeing it on the roads. And I was like, yeah, they're losing money, but maybe they'll go positive. I just bought it. This was cheap. All right, this was before the big move, and then it went up a bunch, and I said, you know what, I just can't handle it. I had to sell out just because I'm not a big what's his name, Elon Musk. I'm not a big Elon Musk fan. So I was like, I'm good. It was up a bunch, so I sold it. Yeah, I sold it early, but I think that they're gonna hit tougher times. I don't think Tesla's gonna be the winner going forward. I really don't. I think that they were first to the table. I think they got a lot of the first money, and then after a little while, I think these car manufacturers going to come in who know manufacturing very well, and they're really going to squeeze everything they can out of it in terms of the costs. and I think eventually the quality of the products will be a little bit better with the other cars. That's with time, though. Maybe not these first ones, but with time. It's not going to be a, I'm Tesla, buy my car because the status. I think that's all going to go away. But yeah, boring companies.
And another thing actually is looking at government spending, right? Because wherever government's money goes, the price of those things go up. Because I was looking at another chart the other day. Actually, I think it was on Data World in a Data website again, but it was talking about the things that have gone up the most in price. And one of the lowest, one of the areas where they've seen the biggest rise in cost was tuition fees, university fees. College fees, basically. So that's an area where government has subsidized a lot through student loans, right? And if we think about energy right now, they are massively subsidizing in a way. I mean, it's not a monetary subsidization, but through release of SPR, the Strategic Petroleum Reserve, they're subsidizing the whole entire sector right now. So that's where government's money is pouring, right? Also, they've just released the Inflation Reduction Act, which is a huge subsidization into nuclear sector. They've just allocated $700 million into the enrichment capacity for nuclear energy. So that's where government's money is pouring right now. So if you look at the pockets, if you look at the wallets of government and the people right now, it's all pouring into energy. And this is exactly, I mean, this is probably like the simplest thing. Like, you don't need to be a genius, as you said, like, to look at where your money is going, where people's money is going, where government's money is going. And you just have to be in that sector and just ride the big wave, because we're in it for a tidal wave, right?
Yeah. What are the two commodities that governments have? Like, what do they stockpile? What are the two commodities, Scott?
Oil.
Oil. And there's one other one.
Natural gas.
Nope, not natural gas. They use it to back their currency.
Oh, gold.
Gold. Oil and gold. And I guarantee those two will go way up. Those are the two that seem to always go up in these crisis type things.
Yes.
I'm just kind of stating what I see is kind of obvious when I started looking. They stockpile in the Strategic Petroleum Reserves oil. They may have natural gas. I don't know. I don't know if they have. I don't think they have anything.
I
but
think Europe does. I think they do have like some natural gas.
But I know they also all these governments have gold. So that's just one thing.
They are building up nuclear. I think they're gonna the funny thing with nuclear is they've got, like, the governments have like zero strategic reserves right now. And I think they will be building up pretty quickly. Like, as soon as like bit of fire underneath and governments start rushing, I mean, the prices shoot up and they finally realize that there's a shortage of uranium. I think that's something that they will be stockpiling pretty quickly as well. And so to go from zero to something that's reasonable, that's going to be a huge push for the uranium prices, I think.
Yeah, I think we'll go nuclear. I think it's just something. I mean, that's why I have so much exposure to it. Like, I think that's something that humans have to do. It's not a want. They're not gonna be like, oh, I want to do this. No, they're gonna say, I need energy. Like, period. Just let's do it. They're not gonna be sitting here freezing in their house saying, well, I'd rather freeze than be warm. I just don't think that's gonna happen. So what else, Scott? Anything else?
No, nothing else.
Nothing else?
No, I'm just like hugely excited. And I think, I mean, if you zoom out, look at the weekly charts, I mean, this is probably like the best accumulation zone for uranium right now. Not to say that we can't piece below it and stay below it for a little while, but if it does, then I'll probably sell more precious metals and get more uranium.
Pull up a Nike. All right, let's pull up Nike real quick, and I'm going to ask you a question real quick.
Okay.
NKE is the ticker symbol.
Yep.
Choose any 20-year period in Nike where it went down.
You can't.
Can't, right? So what about a 10-year period?
I don't think you can. Hold on. That looks
there
like
might be some periods where it didn't go up very much. My point is, and this is Warren Buffett's point, take any long-term viewpoint or time frame, as long as you have a pretty good solid company, they almost always go up over the long term, as long as it's a solid company. And what most people will say is, well, I sold it because it was going down. It's like, well, if your time frame is 20 years and you don't need this money for 20 years, then just let it sit in it and then accumulate it when it goes down. So then if that's your entire like mind frame, so you buy it and then you're like, okay, I'm gonna ride it. Goes up, comes back down, like Chipotle did. You bought it in 05, it went all the way up, came back down in 09, you buy more. You come up, comes back down, maybe it doesn't go as low, you buy that low. You just keep buying and buying and buying as this thing oscillates going up. That's what I'm doing in the commodity bull market. I'm not trying to time this stuff to the TA. It's like I buy it. If something shows me that it's cheap and it looks good, I buy more. That's it. That's all I do. And then I'm going to ride it for the entire bull market until the problems are solved and the money stops flowing there.
Yep, that's right. And until the ratios tell us that it's overvalued. Yeah,
the ratios are cheap right now. Uranium's cheap.
Ratios
oil's cheap. Natural gas is cheap to the S&P 500 to stocks. They're cheap to a lot of different assets.
Yep, this is oil to Dow Jones ratio, for example. It is cheap.
Well, you weren't. Did you pull it up? Because you weren't sharing. If you
sorry,
had pulled it up.
Sorry. Yep. It's cheap. This is oil to Dow.
That's stupid cheap.
So cheap. Look at that. Look at that. You're buying right at the bottom almost. Still.
Well, when I bought it in
the right
2020, oil went like negative. I'm like, how is this possible?
Negative.
Yeah, I was like, how the heck is this possible? This is the most ridiculous opportunity. And then I just started like scavenging for oil companies to buy when that was happening.
And if you're buying uranium compared to oil, uranium is super cheap right now as well. So it's an amazing setup. Amazing setup.
All right. Well, that's all I've got, Scott. Got anything else?
Yeah, I mean, I can share John 3:16 again.
Yeah, go for it.
It's the most important message in the Bible. So, for God so loved the world that he gave his only son, Jesus Christ, so that whoever believes in him will not perish but have eternal life. It's the good news that the Bible tells us. So yeah, that's it.
Perfect. So obviously, thanks for coming on, Scott. I really appreciate it. And if you've made it to the end here, guys, put in the description link. Leave a comment saying nuclear is power. Nuclear is power. So write that in there, send it on the comments, and we'll catch you next time. This is Finding Value.